Traders, welcome back to our price action trading lesson. We're looking at S&P 500 mini futures. The structure of today's session started from the very beginning with a consolidated market. You can see the supportive indicator 200 EMA is completely flat. We have consistent price swings up and down. So now I have to do two things. Number one, follow the short-term trend line rule. And number two, locate the important key levels. This is the support, this is the resistance, because trading range is going to be bounded by these two extremes. And according to range rules, most breakouts will fail, especially if we have healthy trading range from the beginning of the session. So right now we have prices working low. I can see how nicely the channel fits off the highs, off the lows. We have small overshoots. I cannot go long just yet because the downtrend is in play. Even though most breakouts will fail, we're going to buy low, sell high. We still want to follow the trend line rule, break a new high, break a new high. This downtrend to get new low tested, but it can sometimes happen in trading ranges because the momentum near the extreme is going to be so strong. So just gotta be careful. I cannot go long, I cannot go short right into the bottom. So I need to see a few more candles printed. The market keeps working lower. It's not acting as overshoot because after overshoot you would expect stronger correction in the opposite direction. So I'm gonna widen the channel a bit, still keep this channel in play. We're closing outside of this channel. And now, if the EMA is gonna hold, I expect new low to be tested. And if we're gonna stay above EMA, there's a big chance the trend range is gonna take over. If I want to think about buying, I need to see some deeper retracement of this downtrend to understand, okay, the momentum switched. But as of right now, I still follow the short-term trend line rule, and this downtrend needs to get new extreme. So there's going to be a second entry short, something like this to test the new extreme. That would be a decent setup we would be interested in. We only created first entry short, micro double bottom form again. So right now, basically, we are very close to creating new extreme. New low first entry short. Now prices are breaking strongly above EMA. Now we don't need to get technical new extreme simply because we were inside the trend range. This is a weak downtrend and we're pushing back above the trend. You can see prices are bottoming out. We're going sideways. This is indicating value depletion, downtrend, break new extreme, bottoming pattern, push above EMA. So right now what I like to see, because you have a new low first entry short, pull back, I like to see failed second entry short, reverse the pattern, going back into trend range. So this is my thought process, simply because, remember, most breakouts will fail, downtrend played out, and the push above EMA right now is indicating bullish assumption. There is no reason for me to expect prices to go lower. Why? Well, because downtrend played out. So downtrend played out, trend range is the main pattern. Can I get a failed second entry short? I cannot. Prices keep trending higher, so I have to right now redraw a brand new uptrend working higher. I don't want to leave these candles on a chart without a pattern. So this is clean push to the upside, clean trend range rules. So right now, my thought process is still the same. Just like here, I want to see, after break, new high tested. Okay, I want to see new high tested. But I cannot go long so far from the EMA because prices tend to correct to the key entry point. So I would like to see some pullback to EMA, either some second entry long or double trap, some visual to like a pullback, something. I need to see how EMA is going to react. We're so far from the EMA, I can't take anything. And we unfortunately have a break push to a new extreme. So price action is working so far like a clockwork. We don't get a decent pullback though. We have breaking new high. Now, this right here is a failed breakout. Problem is, notice how steep this push is looking. And we pushed quite far up. Had this failed breakout form much lower, closer to the trend range, it is more trustworthy. But because we're getting quite far away from this key level, there's a chance that the bullish momentum can be stronger. So we need to see some lower high or failed second entry long. Lower high didn't get a trigger here. We're going sideways. And now this is interesting. This is sort of visual hidden new high, first entry long, pullback, second entry long failure. Also, you can see prices trying to go higher once, twice, 3 times. So you can definitely argue for this to be more of a hidden failed second entry long and triple test. Now this is way more advanced. This is not super textbook easy setup, but this is a good sign that the failed breakout is going to succeed. There is no bullish momentum, and this is visual failed second entry short. More advanced trader can consider, because right now you're really going to go back into trend range. Remember, this was a healthy trend range and most breakouts will fail, so this is the first decent setup. Prices are working lower, so I'm going to redraw the short-term downtrend, something like this. Okay, we're correcting, so I want to see second entry short at the EMA. Will the EMA hold? It's not holding, so now I cannot take second entry short. We're above EMA. Okay, that's important because if this downtrend is going to get new extreme, EMA is going to reject prices. And the fact that you pushed above, that's a good sign that the momentum for the bulls is too strong. So in order for me to sell, I will need to see a lower high confirmation sub below EMA. Okay, nothing. And we're back above EMA. So now this is really starting to be a little bit unclear because this is not what is supposed to happen. The bullish momentum is simply too strong. And prices are back working higher. So now, okay, everything changed. In hindsight, I can see there's some wider channel like this. Small overshoot leads to a break, push to new high. But even though I redrew this uptrend in hindsight and I have 2 legs down like this, there is pretty much right now no good bias because uptrend played out and we retraced too much and we're so far from this tight leg working lower. I'm no longer expecting new extreme. We moved so far up, so far away from this. This is a tight, weak channel, so we're not expecting new extreme. But at the same time, I have a series of higher lows. We're not confirming key entry point. You can see we broke above it. It is just hanging here. So at this point when I'm watching this, I'm being super patient because every single time here, it is easy to navigate structure. We understand what's going to happen. And now it's getting a little bit wedgy. Some bullish imbalance here, even though it is not significant by any means. But somewhat of a bullish imbalance is kicking in, especially why we didn't get new extreme of the downtrend. This is not what is supposed to happen. So it looks more bullish because we have bullish imbalance. This downtrend is not getting new extreme. So this is how we are going to come to a conclusion that the bias is more bullish. So I cannot sell, I cannot go long simply because there is no good pattern. The kilo is not getting respected. And we're just going sideways. We're just hovering around this kilo. Nothing here. Okay, we push higher again. Market keeps working lower. This was the last chance for the sellers to step into the market and continue working lower, but they pushed strongly above EMA. Okay, so once I saw this massive push above EMA that is negating any bearish pressure working lower, I'm going to redraw slightly wider channel like this, simply because this downtrend has a breaking extreme. Another high low, so much empty room. And the push above EMA is really confirming our initial bullish imbalance. You can see how we are starting to slowly work higher. So right now I would like to see high low confirmation set up. New high, first entry long, second entry long. The high low will confirm second entry long. And if we confirm the fact that we need to get new high. But on my chart, the single bar is gigantic. I would have to use double bar entry. So on this chart, I cannot take it. If you have better bar or a slightly different chart, you definitely can take high low because it is confirming the second entry long and the fact that this uptrend needs to get new high and you're back above EMA. So the next setup is going to be failed second entry short. Can I get a failed second entry short? Yes, new low, first entry short, pull back second entry short failure. I cannot go long above bearish bar. I can use, however, double bar entry, waiting for break above this bar. It is close to the previous bar. 2 key entry points, actually 3, the key level, EMA, and the trend line, and this is great. Failed second entry short because the trend is up, it is off multiple key entry points, and we expect new high to get tested. So 2 great setups context wise. This one was way too big. It would have ended up working anyway if you use deep limit order, but you can see most of the scalp is already made, so it's better to re-enter on this failed second entry short. Breaking new high, okay. So you gotta be careful. Still, I cannot sell randomly. We're still above EMA, and this is some strong momentum. Look at this, okay. So the uptrend is still continuing. Downtrend played out with the break, pushed to new extreme, and we're back above EMA. So let me see. After breaking new high, we would expect correction working lower. That is not happening. We keep working higher. If I'm going to widen this channel just a little bit like this, I'm still getting somewhat of a confirmation here. Copy it, put it at the top. Can widen a little bit. The wider channel is starting to make sense. I cannot go long, however. No setup. We're below EMA. Even though we're above EMA, I would need to see high low, something like this. Is there high low? There is not. As you can see, there is no break below either one of these bars lows. New low, lowest low of this pullback. There is no first entry short, no first entry short, first entry short here, but at this point, it's quite late, so there is no high low. Had there been some decent high low, we can definitely go long, but on my chart, I have so many matching lows, no high low, so nothing I can take. Market keeps working high. Okay, I'm trusting this uptrend. We have possible overshoot. It looks like overextended push phase, but it's not acting as overshoot. We keep working higher. So when I'm watching this, I was looking for some slightly different channel. You can either widen it to draw a little bit wider, or I can draw a channel a bit like this. This is really where the uptrend kicked in and the momentum started. But you can tell that we have micro overshoot. You already know that this push phase is too overextended, okay? Something doesn't look right because normal trend is push phase, correction phase, push phase, correction phase, and there is no ambiguity about the trend channel line. You can already tell that we had to delete our first channel due to possible overshoot, and that is already the first sign that the push phase is overextended. Sometimes beginner traders are struggling identifying the overextended push phase. If you already have to deal with possible overshoot for one of your channels, that's a first step. Okay, there can possibly be overextended push phase. It just doesn't look healthy. Prices continue working higher and we're possibly part of some overshoot. But because trend is still up, I'm going to respect this bullish uptrend. Price action is working lower, break, new extreme. Now we have new high, first entry long, pullback, second entry long. So this is technically a third entry long, but this is so tiny, you can treat it as a visual second entry long. This right here is a visual second entry long, but because the push phase was quite overextended, I'm gonna mark it for more advanced trader. The risk is small. How big is this? Only 2 points. Yeah, you can risk it, but you know, I would like to see how low EMA can we get it. No high low, and now market is basically stalling because it's about to close. And you can see traders are taking profits and it's too late. So this is the overall structure for today. We're gonna go through the price action rules one more time. We start with healthy consolidation, so we expect most breakouts to fail. Indeed, you can see fail breakout here, but still, even while we are in the trend range, we follow the trend line rule. Break new extreme, trend higher, break new high. You can see you cannot go long as long as the downtrend is in play. You cannot go short as long as the uptrend is in play. Only after there is a break new high or new low, you can consider fading. In the meantime, we're looking for the pullbacks to the key entry point. Here you can see that the push above EMA and this downtrend not getting new extreme, combined with series of higher lows, is indicating bullish imbalance, and this is why we're starting to lean towards drawing wider uptrends. Push above EMA is indicating, okay, there is wider pattern, high low or first second entry short. Great setups. No great high low here. Decent small setup, but the market is already closing. It's getting quite late. Quite a boring day once again. Yesterday and today, very boring days. Monday was a great day. We had a lot of easy setups on Monday, but the last 2 days, very, very lukewarm. Price action is fairly predictable, other than it is quite slow. But if you didn't take that many setups, no problem, because last 2 days are really just slow and not that eventful. So hopefully price action will pick up soon. We want some momentum, so we have more opportunities. So I'm gonna wrap it up. I hope you had a good trading day. I'm gonna talk to you next time. Good luck in your trading.